Hello and welcome. Today I'm reviewing 5 crypto trading strategies to take advantage of the volatile nature of those markets. We will cover the breakout strategy, scalping, one momentum techniques, one fading strategy, and reversal strategy. So if you could subscribe to the channel and stick around for the full video. First crypto trading strategy is the breakout one. With the breakout strategies you can identify when the price creates the specific level. The aim is to find the key levels and to take the one position if the price moves above resistance and enter the short positions. When the price breaks below the support, usually violates the chance to increase after the price trading beyond the key price. Bearish prices and trend to the direction of the breakout. We will use the true strength index, which is indicator of that capture the flow of the prices action and filters out the noise. It's fluctuated between the positive and the negative and create one of the indicator defense the overall bands to find the high probability breakouts. We will focus on the direction of the future trends by analyzing the center line crossovers as signal to buy generated when this crosses above the zero. Signal to sell is generated when the T's cross below the zero with breakout nodes. The goal is to enter the market right when the prices makes the breakout and continue to the right the trade until the volatility dies down. That's why we use the true strength index because it interprets volatility in its calculation. The goal here is to use the volatility to our advantage. We will search for the breakouts and we will confirm them with the bullish or the bearish momentum indicated by the true strength index. The trade plan is to buy resistance breakouts when this is positive to the sell, a support breakout when this is negative. Here we have the example of the upside breakout. First we identify the resistance and the level. As the price broke through this area, the true strength index became positive and confirmed the move that the breakout also occurs is the director in the intentional trend and this is the exact type of the breakouts you should be searching for. This type of the breakout can be found during the trends after a trend length price often spends some time raining consolidating before the continues to the trends. Such periods often greater re-entry opportunities if you confirm with this. Here's the level first acts as the support and then the X is resistance once breakout. The ties once follows the price actions on the chart when the price came back to the resistance and rejected to the level of the true strength indicator bearish momentum the whole time confirming our short bias. In this other example we have a long entry near a key support level as the price reaches to the area and the true strength index is above the zero, including indicating the strong bullish momentum. And here we have another entry, the same pattern. This is a great oscillator to the trend in the crypto breakouts because it identifies both of the trend directions in the strength of the trend. Second strategy is the scalping, using the smooth Haikishia. The smooth Haikaishi is the modified version of the regular Haikaishi candlesticks chart. The indicator is used as the overvalue on the regular candlesticks charts, just a moving average. Prices is the uptrend when the smooth Haikaishi indicator is the bullish or green. and the downtrend when the indicator is the bearish or red. Smooth Hikashi is the trend of the following indicator. During the short term uptrends, price trends to stay above it. In downtrends, price typically stays below the indicator. The first possibility of the changes in the directions is when the price crosses through the indicator. Downtrends start to reverse when the price goes back up and through the smooth Hikashi, when the uptrends show the signals signs of reversal, when the price falls through the smooth Hikashi below it. You can use a 10 look back period to be on the right side of the mirror market trends. When the prices and trading higher, the smooth Hikashi will adjust by the also moving higher to reflect the indicator prices. The opposite would be true when the prices is trading below the indicator, where you would then look for selling opportunities below the scalping setup to increase the probability. Like to use the price action entry. The good old simple trending breakouts when the price breaks a downtrend line, then the high candlestick indicator turns green and the price moves above it. You get a chance to enter the long when the price breaks upward trend line. The high Kanash indicator turns red and the price moves below it. You look to short the market. While the drop below the trend line would likely be the first signal for the reversal. In the short-term trends, it's important to pay attention to the Hikashi indicator to confirm the movement. The indicator turned red and price moved below it, so this was the good scalping opportunity. The momentum strategy revolves around the trading strong price moves in the direction of the main trends using the price actions ABC pattern and marked histogram. I've talked about this strategy a few months ago. The principle for this strategy is the simple. In order to the trend remain active, each successive impulse swing must be taken to the previous sign. In the uptrend, for example, price will often make 3 points. Points is lowest low points forming the support level. Point will be highest point forming resistance level. Point C will be the second low point, the support level, which must be higher than point. The breakout of the price above point B signals to the continuations of the uptrend with the bullish momentum. The entry is simple. You buy the breakout of the point B only if the MACD histogram remains positive during the formations of the third point C, so make the histogram shouldn't go below the zero level. Here's the example. We found point and the first movement higher is the point B. This followed by the retracement that creates the higher low in the point C. Remember, the point must be higher than the point A. We analyzed the MACD. If they remains positive, we wait for the prices to take out the recent height of the point B. As the MACD didn't go below the zero level, it's positive momentum, and then the price breaks points B when we can safely enter the trade, taking advantage of the upward momentum. So you can also filter signals using the moving average. We have a downtrend with the prices below the 200 EMA, so we trade short entry in the directions of the main trend point. Is the highest points when the price finds resistance points, becomes the lower low points, and forms support level prices. retracements, and it forms a lower resistance points of the point C. Remember that the point must be lower than the point when you spot the ABC pattern. You look for the momentum conditions during the formation of the third point C. The MACD histogram remains negative below the zero line, so negative momentum, the price breakdown below the point B support. However, indicates the market is most likely to continue going down. Fading and extremely rewarding strategy of the profit from the noises trading to the enter to the market at the wrong prices. The aim to define the areas where the trades are trapped in the market more. Specifically, I looked for the bears traps. A break trap appears when the market is apparently going down, only to have the price reverses and shoot higher. This counter move products to the trap and often lands to the sharp rise. We will use the 5 simple moving average for the facing the move. Here's how it works. First, you need to identify the move coming into the support, but uptrend is so. Look for the prices to make higher highs and the higher lows, and search for the previous of the corrections you took for the breakout below support to trap when the office breakdown trades. Then you look for the strong bullish inside the support level. You will use the 50 simple moving average as the final confirmations that the bears are trapped and the long trends are on the cards. So in short, you wait the price to close above the 50 simple moving average. After the clear breakout, the downtrends downside is the upper. We have two uptrends with the price consolidating in the range. The price broke the support and immediately retraced within the consolidations area. At this point, we only need the price to close above the 50 simple moving average and go on. The price took off, leading to the trap trades with the short positions below the 50 simple moving average. The same pattern here, high highs and high lows, and the price makes downtrends breakout against the trend. When you face the market, you have to only one scenario. Your head is go long, so you wait the price actions to confirm to the invalidate to the bear trap. The week of the scaling is the first clue that the market has upward plans. Once the price goes above the 50 simple moving average, you have to the uptrend on your side, and a lot of the traders trapped into the short side engine to get off their long positions. Reversal trading is the more advanced strategy and requires extensive market knowledge and experience. In this strategy, you anticipate pullbacks and try to predict their trend using the money flow index. The indicator uses prices and the volume, and the concept of the accumulating the distributions being quite helpful in the confirmation trends in the prices to the warning of the proportional reverses in the prices. Crypto traders that use volume in their analysis often look to the divergences between the volume and price, and the volume is the trending one way while prices trend in the opposite directions. It could be a leading indicator to the upcoming change in the direction of the market. For example, if the price is making the new highs and they make and the money flows is to make the new highs, or the cruise is bearish divergence, and you can use the sell signal. If the price makes a new lows but the money flows fails to the new lows or rises, would be bullish divergence. And since the money flows intelligence volume data into the divergence between the directions and the indicator, and the price could be leading signals. So We took the bullish and the bearish divergence between the price and the indicator. We will enter to the reliable prices actions signals to the trendable breakout. Here's the example of the money flow index to reach to the overall area. We have to divergence between the MFI and the prices. So look at the locations of the divergence where it has formed, and the area to the resistance to the sell signals was confirmed after the trend line was broken into the downtrend. The same setup here of the MFI reached to the oversold area. We have to divergence between the MFI and the price, which has formed at the area of the support, and the buy signals was confirmed after the trend line was broken to the upside. Is the more advantage and the risk setup, but you can apply to the higher risk to the reward ratio. So if you like and you trade stop, you can catch some digital reversals. If you learned something new, and hit the like button and subscribe to stay up to date with the latest research, and check out Academy program if you want to the future level up your trading. Until next time.